Hello, welcome back. I can promise you that if you keep watching this video to the end, you are going to be seriously amazed. What I have been working on in the past year, pretty much daily on this one, is a stock analysis tool that is powered by AI. And in the past, I could obviously not do that. And not only because of AI, that wasn't a thing back then, but because I was using external APIs, like a vendor that was giving me the prices, it was giving me the financial statements, values, and everything. And the problem with these is that a lot of these tend to be wrong. And so I would contact them all the time to fix statements and values and all that. And I understand it because it's actually really difficult to parse statements. And this is how they were doing it in the past. And so I always wanted to make a better tool with the scope of being able to analyze a company fully by having all the correct numbers as much as possible, as much as feasible, and being able to tell a story and tell it from the viewpoint of an AI, with the help of an AI. So I'm going to show you here what has come out of the tool so far. And frankly, I love it. It's been amazing to even look at new companies here. And right now I have scanned a ton of companies, and for the sake of this video, to show you how this works, I'm going to talk to you about Intel, and this is going to be from the scope of someone who has no idea about the company, other than the fact that maybe it has been doing better through the last few quarters, so it has been growing in terms of their stock price. So you don't know much about the company, you want to learn what has been happening. The only thing you basically see is that they are doing really well recently, with the stock prices pretty much climbing. Now, I have, and for you guys that were following me in the past, you probably remember these key insights. There's a ton here, and some of these are actually going to be specific for banks. Right now, this tool is much more advanced than the previous one I had, and you will see that. But let's take it through some analysis, because this is super exciting, and you'll see why. Now, the P ratio here, you're looking at it, for instance, and you're seeing a massive bump, which usually means that the company is actually not making enough money to sustain the stock price that keeps climbing. This is why this is very high in comparison, because it's a price to earnings ratio, right? So the higher it is, the worse it is. And you can get a quick tooltip here that tells you what we expect to see. And of course, this changes a little bit with the industry, of course. Now, outstanding shares are also climbing. So you see that too, which means dilution, means that the company is actually selling shares, diluting current shareholders. And this is usually not great unless the company is using this dilution for good purposes, like expanding, for instance. Same thing here, price to free cash flow ratio going down into negative territory, usually indicating that the company is losing cash via capital expenditures. But we don't know the story exactly, right? And total liabilities to free cash flow, how many years of free cash flow it would take to pay back all total liabilities of the company, basically kind of telling you how much free cash flow the company has in comparison to their total liabilities. Now, this is nice, this is great, and tells you all of the things here, and also you can see that the margins are also going down, and you will see that there is an annoyingly really good amount of years here and quarters and everything, and you can actually see it here. Like if you take a look at the income statement or the balance sheet that we have, or the cash flow, you will see that we don't only have years. Like if I go to the display settings, we can go annual, and you will see that we have not only 10 years here, which are like fully, oops, I accidentally refreshed. These are like fully populated, as you'll see here. And also, if I take it to quarterly, you will see that the quarters are also fully populated, which is insane, because in typical APIs, you won't see that happening. Like you will not see fully populated items. That does never happen. Most of these are going to be empty or just wrong. And the reason for this is that they are using parsing instead of AI, because all of these have actually parsed with AI. I'm going to talk about it later in detail, about what has happened here, because this has been an effort that has been taking me pretty much the full year, and I'm talking about like 10 to 15 hour days. It's a lot of work here for what you will see next. Now, let me go back here a little bit. And this is analyzing a ton of stuff. This is why it's taking just a little bit of time here to analyze, not too much. But you will see also that the margins are down, and then you will see some of the typical other values here. But as an investor here, or as someone who is looking at the tool, you may be thinking, okay, so what does that mean? Like, how can I analyze that? Like, I'm not an analyst. I'm not like a professional stock analyst here. What do I make out of this? And so there's a page here which is called the company profile, which actually is also created by AI. So you'll see that this is oddly specific here. And the reason for this is that the AI has actually analyzed fully the company's statements in order to be able to understand what are the key competitors, the presence, pretty much everything. And wait for it, because this is nothing. You're going to see way more impressive things here. Now, compact. This is the compact view of the timeline. The timeline actually tells you of interesting things that have been happening for the company through the years. So you'll see that this goes back. But some interesting things here, for instance, you will see that Intel cuts 15% of workforce. And if you click that, you'll see the details. And usually this is bullish, and the AI has come up with it being bullish. After obviously I have trained it to consider it as bullish, as a bullish situation usually, because the Wall Street tends to consider these events as bullish. Now, if I go back to compact again, you will see another one. Intel sells 51% of Altera for 3.3 billion, keeps 49%. Another interesting one. Okay, so now you know that the company actually sold a business that they used to have. You see their Altera programmable chip business to a Silver Lake affiliate. But this is going to get more impressive, because if I go to corporate history, and again, this is retrieved via AI reading the actual filings. And again, this has been a ton of work. Now, if you go back to 2015, that's 10 years ago, right? You will see that Intel actually acquired this company. And this actually tells you graphically what happened here. So they acquired it for 16.7 billion. You'll see Altera Corporation became an affiliate, basically a subsidiary of Intel Corp, which is the parent company right now. So we know that this happened back in 2015. If I go back, and compact is what I like to use, and then I go here and I see now Intel actually sold part of the company that they previously bought for like 11 billion. You see it's a joint venture now, because like 15%, 51% and 49%. And you'll see that they sold a 41% interest, so the majority interest in Altera, to an affiliate of Silver Lake for approximately 3.3 billion, which is effectively selling the company for a total of about like what, 7 billion or so, or 7.5 or something. Much less than what they bought it in the past. So now this already tells you that the company is kind of striving for cash, right? So it tells you that a business that they own either is not doing really well, or they actually sold it for cash. And 10 years later, this, and especially in this kind of climate, this kind of already tells you that they were looking to get some extra cash here. Now, this gets even more detailed, because I have a section here which is called AI Deep Dive. And that's just one of the sections that is going to tell you what's happening. Now here, the AI Deep Dive, again, working with AI, it's going to give you some important descriptions here of what is happening in all these different areas and an overall investment score for the company. But what I really, really enjoy taking a look at, that gives me a lot of amazing insights, is the key investment stories. And this is a feature that I created because I always wanted to have. I wanted to have stories about the company, like quickly telling me what is up with the company, like if I'm looking at something, what's happened here, what has been happening. And so this is going to be like 4 or 5 stories about the company. Again, the AI analyzes the reports and actually compiles these stories for me. And these are going to be for every company that I have scanned. This is not Intel specific. So it's going to be for every company in the database that I have right now. Obviously, for its own operations, of course. And here, you will see, for instance, don't be fooled by the recent profit spike. So what is this talking about? It says, Intel looked like it had a great quarter, but here's the thing. Most of that win came from one-time deals and moving numbers around on paper. So, for instance, they sold half of their Altera business. Remember what we saw earlier, which gave them a quick 5.5 paper gain, right? Now, notice this is casual here, plain English. And I do have a version for analyst language. So if you are more savvy and you are looking to get more details like numbers, you can click that, you see it switches. And now you will see here the finer details, like 5.5 billion pre-tax gain, while the S-Crowd shares fair value change produced a $1.7 billion hit. Now you're looking at that and you're like, what is this? And you'll see here S-Crowd shares were remeasured to 5.6 billion fair value and produced a 1.7 mark-to-market loss in Q3. 2025, of course. Now, you are looking at this, and now you know that the company made some money by selling the business, and you see this 1.7 billion, which we're going to come back to next. Remember, I'm looking at this without having any clue about the company. That's the whole point. Like I'm trying to discover details within the application that actually provides me with the details. Now, we saw this net income here. Now, so if you go back to the financial statements and the income statement of the company, remember this was to 2025 Q3. So 2025 Q3 here. And of course, we can usually also, I have this, which is pretty nice. You can actually convert if you want to any currency, and this is going to convert to the specific rate of this Q3 2025. So if you go back to 2023, it's going to adjust for 2023, which is pretty awesome, frankly. Now, you see Q3 2025 here, and if you go down and down a little bit more here, you will see other income, $3.9 billion. Remember what we saw earlier? This is not coming from operations. It's net income because of the sold company. And so if we go back here again, the AI deep dive, this is my favorite section. I absolutely love this one. You will see what we talked about. So the total was 5.5, but this said 3.9. Why? Notice this 1.7 billion. Now, again, we still don't know what this is, right? But here's where we have the Q&A analysis, which is another section that I absolutely love. And I'm going to use focus because this is what I typically use, and this is pretty nice to see. So 1.7, I just typed 1.7. So what happened here? You will see that this is referring to this as crowd, or you can also even type as crowd. So it's going to bring you even more in the case where they actually don't refer to the actual value. So what happened here? You'll see a lot of different questions and answers. Again, this is derived by AI. This is created fully by AI. And the idea for this feature is that the AI reads statements, analyzes them, and produces questions and answers in a critical manner. So it acts like an analyst and produces critical questions and critical answers that is actually answering itself based on the data that is on the official reports, which has to be accurate. This is an important point. So this is why these are valuable here. And it tells you what happened here. Escrowed shares are shares issued to the US government, but held in escrow and released as funding is received under secure enclave. Classification as a derivative liability versus equity changes, whether fair value changes its hit earnings or equity. So, escrowed shares accounting is unresolved and could force material statement. Basically, this tells you that Intel sold some shares to the US government because the US government funded them. Remember the CHIPS Act. So this was what happened here. They have escrowed shares here that have to be materialized. So they have to be taken as a loss. And this is what you see here. So you see the whole story just by reading all these questions and answers here, which is just absolutely amazing. Because again, you can get everything about the company. You can understand all the stories just by reading at this without even taking a look at the outside world or actually trying to analyze. This is something that you probably would have to spend a ton of money or actually hiring analysts to get, which is pretty awesome. Now, you will see the other story. Lots of cash for now, but they're spending like crazy. Meaning what? What we saw earlier, remember? For negative free cash flow, tons of capital expenditures. So Intel is sitting on about 31 billion in the bank right now, cash, but they owe a massive 45 to lenders, as you'll see. And actually, this is about the liquidity. This is not this specific story. It's about the amount of money that they are actually owing. But there is also more, because you'll see that the one that I was talking about, the free cash flow. The new factory business is losing a ton of money. And this one is actually about the operating expenses of the company, I believe. Because you will see Intel is betting the whole company on making chips for other people, foundry business, but it's a huge money pit right now. Lost over 2 billion this quarter. This is like depreciation costs, for instance, for the factories. There's also operating expenses for the factories that obviously drain their cash reserves. And new partners mean your slice of the pie is getting smaller. Remember what I talked about earlier? The US government is now a major player because basically they bailed them out, holding hundreds of millions of shares. So existing shareholders now own a smaller piece of the company. Remember the dilution we saw earlier? And again, if we go back, now we see how the numbers reflect the actual stories that you were just looking at. So here are the numbers, right? Remember this one, is because of the company is actually not losing money compared to not making enough money compared to the stock price, because the stock price is getting higher. Outstanding shares are actually going up because there's massive dilution. Remember, about 2025 is where they are actually issuing a ton of shares to pay the government. And price to free cash flow ratio going down, liabilities to free cash flow going down, because they are spending a ton on their business, on their capital expenditures for new factories, basically the factories, the fabs, basically that are for chips. Actually, let me go back to a deep dive again yet. Now, this is pretty awesome because, again, it tells you a story. And when I was making this feature, I wanted it to be portable, and I thought I should make an export that actually looks nice and reads nice. And so you can have both versions, like casual, investor, or both if you want. If you go to casual and you export as HTML, you will see this pretty awesome thing here, which I thought I would make because it's an easy read. It's almost like a blog. It's practically a blog, so it reads like a blog. And you will see the things that we're talking about, plus the questions and answers, like all of them. If you don't want to search for them and you just want to have like a blog page to read about all these topics about the specific quarter for Intel. And these reports are actually coming out per quarter. So you're going to see more of these as the tool scans more quarters as I keep scanning more. It's an automated process. I have a pipeline for this. Now, there is even more. And the tool has a ton of stuff. I just wanted to show you some here because they can be amazing for analysis. Now, this video can actually take me an hour if I keep going like this. But these stock alerts here are very complex because they don't just measure one thing and call it a day. They adjust to the specific business and actually consider all the pitfalls that could happen for a specific metric and a specific case. Now, for instance, the margin trend here, you will see that it's in the negatives. And so you'll see a negative margins here as we progress through the years. And so you'll see that the operating margins shrink. But we already know that this happens because of the operating expenses of the company, right? And they are not making as much money as before. So their net income, we saw that with the PE as well. The net income is going down and they are spending a lot more. Hence, their margins are actually in the negative right now because they are spending a ton of money, is the story, for pretty much sustaining stuff for the most part. And capital efficiency basically measures the capital that the company has, how efficiently they use to produce more money. And again, this is a one right now, is poor for Intel. To be expected because of all the amazing things that they are doing with the factories. But the tool actually lets you know what is going on in terms of numbers here. So you can understand why something happens, and you can evaluate whether this metric actually makes sense for the specific company, or it's something that shouldn't be happening and it's actually bad for them. I think in this case, it's something that you would expect, this lower capital efficiency, because of how the company is acting right now, because they are in a phase, and you saw that already just by examining everything here, where they are expanding their business, are trying to create new factories, trying to create new stuff that will eventually have them compete with the big players. This is what they're doing. And again, you can clearly see it. And if you read more of the elements that I showed you earlier, and the documents and all that, you will see that that's the case. Incremental margins is another one that's usually interesting, and for Intel as well. But for Intel, it's going to be really bad here, again, expectedly, because they have negative margins. And so the tool actually warns you about this, because normally incremental margins are about companies that produce margins. But in this case, this company is actually having declining revenue. And so the tool actually recognizes that and tells you, be careful. So this is a warning. This may look good because you have a very high number, but it's basically very high because it's too negative, making a high positive number. And practically speaking, this is negative because they're actually, for every $100 of revenue lost, their operating income drops by $500. This metric, and I don't want to be explaining every metric in detail, that's not the point, but this metric is sort of like an economies of scale metric, telling you, okay, if I make a company that is producing some pizzas, as you see here, making the 100th pizza costs just the dough and cheese after a while. So in the beginning, a company spends more for all the expenses, but as you grow, as you scale, it tends to be less through the years. This is what this measures, this metric. And so we have a lot of different metrics here, like the working capital quality. Now you see this as a 5.5, as a 5 out of 5. And if you go learn more, everything is going to have details as well. So this is pretty awesome too, if you want to read up on stuff. And there is even more about this, I'm going to tell you later. But this may sound great, and it may be great, but you have to take into account the fact that the company is actually selling less than what they used in the past. So, for instance, if you have less suppliers and if you have less people buying your products, this is probably going to go up. It's going to be better. So you have to take all these things into account, and this helps you consider all the situations, of course. And you have other things here, like earnings quality. You have free cash flow quality, which basically tells you how the profits are utilized. Are they real cash, for instance? Are they actually paper value? Is this like paper net income, or is this actually cash flow? And all these things have merits. Again, I don't want to explain everything because the video is going to be an hour, at least. Like the earnings quality, for instance, here is going to tell you, okay, the company may be spending a ton of money, for instance, in depreciation costs, but are they actually making cash? Because these depreciation costs will eventually dissipate at some point. So is the company actually profitable in terms of the money that they're making? This is what this earnings quality is telling you here. The free cash flow quality is different because it tells you about the free cash flow, which is obviously getting obliterated here as the company is spending a ton for capital expenditures, right? So you have these two metrics here. And I have things that I also like to take a look at, like for instance, the Buffett ratio here. What Buffett said is a known ratio here, which is called owner earnings. I have adjusted it a little bit to account for stock-based compensation, for instance, which is a thing that wasn't a thing back then when Buffett was when he said that back in 1980 or so. So I have adjusted things a little bit, and I'm also accounting for the negative cases, which is another one here. This is why it's going to be negative. You have to study these in more detail to really see what is happening here, because again, I could be talking for hours. And there is a ton of metrics, and each company is obviously going to have different weaknesses and different strengths. Share dilution here, stock-based compensation. Other companies are going to be worse. The Resultman Z-score, which is basically the risk of bankruptcy. The Binish M-score, which is sort of like the risk of manipulation of books for a company. All these things are calculated. And the amazing thing is that they are calculated out of real numbers extracted by AI, which is really, really accurate, is what I've seen. And I have spent a ton of time analyzing and examining the numbers. This has been a ton of time. And just to show you quickly here, you can see parts of my scan here that have a lot of background stuff running for extracting values out of companies. Like you will see the quality of extractions here. These numbers here tell you how many fields per quarter. Like for instance, 2016, Q4 has 65. 2017, Q3 has 80. So all of these you'll see that pretty much they're filled in everywhere. Again, because they're extracted by AI. And you'll see all the companies here pretty much have all fields, which has been amazing. Like this was really tough to do in this manner, like not missing a single quarter pretty much or a single year. And I have made a ton of work. I've actually spent a ton of time working on this and finding all the different cases, and especially for foreign filers, because I have companies like Alibaba, of course, or Neo, all these companies, again, with the same quality, pretty much having everything. And I even have things like dedicated fields for banks, which can be another video on its own. And for instance, here you will see the results of an extraction. You'll see the values, which I also provide via an API, by the way, which is pretty awesome. So we talked about all this, and there's a ton of more things to see here, like the stock evaluator would be another one. The DCF, you can use a DCF, which is much, much more detailed than the previous one that I used to have. Much more detailed with scenarios and everything. I'm going to be talking about these in new videos because these require its own video pretty much. And again, I don't want to take a ton of hours to actually explain everything. But this is going to tell you a ton of things about the capital intensity, which is going to indicate how important the DCF is in the first place. Like, does it make sense to run it? And I've also even adjusted scenarios to account for this. Like this company, for instance, you will see it's in a decline. It was profitable, now losing money. Free cash flow decline, was profitable, now losing money. So it adjusts their growth potential here and what you expect out of it. So if I take a look at a company like Google, for instance, it's going to be a different story because completely different model. And so let's just take a little bit of a look here. It's going to load Google. There's a ton of numbers that this brings and analyzes. That's why it's taking a couple of seconds. But you will see this is a completely different story here because this is a standard company, consistent profitability. So the averages are going to be much more consistent, and moderate capital intensity makes more sense for a DCF model. On the other side, if we take a look at JPM, for instance, which is JP Morgan, the bank, the tool recognizes that. The tool immediately recognizes that this is a bank. And for banks, business model is completely different. Now we don't have things like free cash flow so much that play a role, if not at all, frankly. And we don't have cost of goods, for instance. It's a completely different business. It's basically interest arbitrage is what banks do. It's like loans and interest. And so here it is going to be another story. For instance, this will tell you that DCF may not be the best tool for banks. And will inform you about this, and it will tell you why. And also, if you go to dashboard now for JP Morgan, you will see that there are metrics that actually are bank specific. So non-interest income ratio, loan to deposit ratio, equity multipliers, leverage ratio. And again, I'm not going to be spending time to explain everything here because this is going to be hours. But these are extremely useful, like the net interest margin, for instance, extremely useful for banks. And I'm getting it out of their report. So it's their official data. And some people may not know. Obviously, it's, you will not know probably all the ratios that the bank can use. But if you go to Investors Academy, I have created an academy here that is that has like more than 170 pages. And it's really, really detailed. So if you go to, for instance, net interest margin, there's a full page that's going to explain to you what this is exactly in detail. So how you calculate it, what it means, what affects it, real world examples. And it's going to be different, for instance, for commercial banks, the expectations. And actually the tool catches all this. Like the tool has industry specific expectations for these metrics. Like for instance, when you see in JPM, let's say the net interest margin here, you will see, notice this, it says commercial bank. So good is more than 2% here. And this matters because commercial banks can have moderate net interest margins from traditional lending and deposit taking. Because again, remember, this is about arbitrage, like a little bit of gain, a little bit of loss, how much money can we make in between, right? And so the tool actually has these adjustments for all these metrics that make sense. See this one here? Traditional commercial retail bank. So the optimal is about 25 to 50% where JP Morgan is inside. And you will see the history as well. Pretty impressive, isn't it? I love it. It's been so awesome. So yeah, I could be talking for hours, but I think I will probably stop for now and continue with more videos in the future. Hope this was interesting. Also, you'll see that there is an API as well and an API tester. The API exposes a lot of things, so you can actually get the values and use them yourself. And the income statement, for instance, here, I can go whatever company, I don't know, let's go NVIDIA because people are interested. And I will remove the year, I will just get all years and all periods and execute the request. And you will see that this is actually fetching their own numbers, which is the same numbers that my tool is using. And again, all these numbers I have calculated it with the help of AI. Nothing is from an external vendor, nothing. All of these are from calculations that I have done and the pipeline that I have created for extracting values out of every company. And it's been a journey. It's been tough, but I'm really proud of it. It has come out really nicely. And the nice thing about it is that I can make all sorts of tools here. Like there's a lot more that is already working. There's also technical analysis. There is smart money, which is another one that I really like. And this is going to tell you about some of the known institutions or celebrity portfolios and all that. Well, it's pretty awesome as well. And I keep expanding. I potentially later will add Congress and stuff. But the most important thing is how good the actual values that I'm extracting are. This is what I love, because the values that I'm getting and reporting in the statements and I can actually use to as ratios and create stories and all that are just so precise and so many, like you can see how many they are, that it's frankly impressive. And because of the use of AI, I was able to create these tools here. Like you see, for instance, earlier we talked about Intel. Now these are the stories for JPM, for instance, where I am right now. It's random. Like I can select another company just by searching a random, I don't know, Home Depot. And you will see their stories here. It's going to load their stories. And so if you are interested in buying this company, if you want to analyze this company, this is going to tell you the details about it. Again, analyzed like an analyst from an AI perspective. And you can analyze the financial statements, you can analyze the metrics, you can utilize the Q&A. And I really like to use it with focus because this one is more of like a concise view. But I do like using the focus because I can see everything and select everything that I want and really deeply analyze how I want it. And also you can see a quick overview of what the AI thinks here. And again, you can combine with stock alerts. For this specific company right now, it's going to be different, of course, than Intel. So this is going to have completely different business model. So you're going to see other important things that you want to be analyzing. Like Home Depot, for instance, is going to be an inventory company that you care about inventory, that cares about inventory. So it's going to have more metrics that are more important for this company. Or you may have receivables quality and accruals quality, because this is a company that will heavily utilize vendors, for instance, and will heavily utilize suppliers, of course. So you kind of want to see how they are doing this in their business. And yeah, this tells you the story. A goodwill risk. There's a ton of alerts here. I think I've made about 20 or so, if not more, total. This one is using, not every company is using all metrics, of course, because some of these are business specific, obviously. But yeah, this is pretty awesome. And yeah, that's what I wanted to talk about in this first video. Later, and especially if people want to hear about specific companies, I will make more videos analyzing them. And the nice thing about it is that now I can analyze like a story. Like I can tell you what is happening in the real world, not just with numbers, but with the actual happenings, like what is going on. So for instance, again, for this company we saw, and there's a profile. Remember the profile that I talked to you about earlier? So what are the competitive advantages? This is again by AI. It's completely different than Intel. The products and services, the business segments. And now again, key events. What happened with this company? Credit lines, for instance, here. What were their events? What was important for this company? What's the corporate history? They had an acquisition here. It's the Supply Holdings. I don't even know. Like each one is going to be different. Or the name history. There was a name change here for the company. It was just a comma here. But yeah, I also grabbed these. I grabbed a ton of stuff about companies, and it's probably going to be even more in the future. There's a ton of things going on in the back end. Okay, so yeah, that's what I wanted to talk about. Thanks for watching. Tell me what you think about the tool. I'd love to hear your opinions about it. And again, thanks for watching, guys, and have an awesome new year as well. I haven't told you that. See ya.